All right, 25. So we're buying 124.15, 124.10, 124. At 125, if you make that 125.10 and 125.20, you'll probably get it filled, and you'll be making 100 points. This is for day trade. So this is making 100 points. If the risk is at 123.60, so it's a risk reward of roughly 1 to 1.2. Remember, you're logging in at and 124.15, which is about 55 points, and your profits at 124.15 is about 55 points, and your profits are actually all the way up to 125.10. So it's 55 points against 100 points, which is roughly 1 to 1. Okay, good. Bullish. We are bullish, of course, and we would contemplate to buy 124.15, 124.10, and 124. We would amend these levels here. These are early today's levels. You're up in session. If we would have seen a dip, okay, now this has already occurred, and we are contesting the neckline at 124.38. We will not change the market, but we'll be readily behind it. We can long 124.15, 124.10, 124. Our stop is 123.60. If you don't want to be spiked, you could take that to 123.60 or 50, 123.60 and 50. Below that, we would want to be out. And we are going for 125.10 or 125.20. If this trade has potential, we'll see that on the next chart, we could go all the way to 127. Okay, the trade does have potential, of course. All right, so let's see first the 4-hour chart. We find that it is accelerating. Recall that today is risk appetite day. Okay, so you will see a lot of acceleration. Please don't change the market. You're quite behind it. You're just following behind it at 124.15. The first reflection that happens, remember that you're in neckline here, and you will get filled. Okay, so on the 4 hours, the momentum is not very strong. You could still get a rejection, and you will definitely this overbought level. Okay, so if we manage to break above overbought levels, we would consider to add to that position. Remember, we're simply dealing with that growth wave. Very easy, very isolated and segregated, and our risk here ends at 123. Whatever we buy, if you were on the floor meaning on the New York Trade Exchange floor, any kind of trading floor, really you would just buy small quantity below this point, and you are fine because the trade is trending higher and you'll be making money on it. But of course, computers and charts have changed. Okay, so if that was, we have a strong signal on the hourly chart, and this gives us lead to believe that usually on the 4 hours we were expecting termination here below that. Currently you can hold the current trade, of course, all the way up to 125.10, which is here, right below this point here with internal 1. Okay, theoretically it's like this is a 1, 2, that is 1, 2, 3, 4, 5, and that correction here, even though it's at a moving average, could below 2.01. This is why we're taking profits at 125 and 125.10. Okay. However, if we break above 125, I believe we'll be going to make a second top, a double top. Okay. It depends, of course, if the euro is going to be bullish. All right, and in that case, we would be seeing 127 and even higher. Okay, 127 and a half, 123 levels shown here. 127, 127.34. We will not shoot the gun, or we will not, jump the market. The general impetus is that the euro will not be appreciating currently against the dollar, so it should not be appreciating against the yen. And therefore we are trading, actually trading. The action should terminate at 125.20. So we will not jump the gun unless we see positive momentum on the 4 hours. So we only have now positive momentum on the 1 hour. Okay, and we would expect that to take us to 125.10, which is about 125.20, which is about 60 points from current levels. Okay, and of course we enter on a retraction. We will change bias, of course, if once we have positive, strong. Okay, we could then consider that we're bouncing out of this year, out of the top of this year, and it's still going to do a double. Okay, so today, to recap, for euro yen, at 124.15, 124.10, 124. Our stop is 123.50 or 123.60. We're going to 125.20. If you wish, this is for intraday trading. If you want to take it as a swing trade, there is potential, there's possibility. The way the market is unfolding, it has risk appetite, and there's possibility to go all the way up to 127 and 127.34. So you could want to hold part of that. This is now 200 points away or more, and if you all entering 124.10 and 15 and 20, it will be 300 points away. It will be a very feasible entry. Okay, we don't need now to go into the long-term picture, but to conserve time and move on to our next issue. Okay, so we take some questions first. Starting with euro yen, we treated now euro yen, we know what we're doing. We will to recap, we're longing 124.15, 124.10, 124, all the way to 125.20. This is today trading. If you are in this as an investment grade, okay, you could be up to 127.20. You could hold the position, of course, put stops at entries and go all the way to 127.20. We'll do oil in a minute, and we will. We'll be doing the full euro dollar very shortly. We have a very comprehensive analysis for euro dollar today. We'll also do the silver. Okay, we'll just there we go. Alright, we'll first do sterling. So we'll do dollar yen. Okay, so that is good. That is dollar yen. So according to the current analysis, it is expected that we will actually end in diagonal, which is a bullish pattern. Alright, but a bullish pattern at 103.8. So we were biased to sell. Alright, yes, last week when the topic of specialized market broke lower below the trend line, now it broke higher above the trend line. The general impetus on this is that it's going to be a very stagnant issue, like I was explaining earlier. Yen, dollar, and Swiss franc will be appreciating until the United States election. Very muted momentum, and this is what is called an ending diagonal. So we would retain our shorts. Okay, we hold on to our shorts all the way up to 105.3. Okay, so if you are short at 105.8 is that level here. Okay, and if we rise above that level here, this motive wave, this motive bearish wave gets negated. Okay, you can consider that you have become bullish. You can take a loss at 105.8, or you can take a loss at 105.8. If you are of short at 105.60, you could wait until you fall back and get out of 105.60, alright? And we reverse bias above 105.8. Something fundamental would have happened then. Something that is very bearish, okay, and risk adverse for the dollar to rise again. To rise, alright? I wouldn't say against the yen, but against all the other movements. Okay, so we retain our position. We believe we still have potential. It's also very lucrative. You could sell the market and you have your stop at 106 or 105.9, of course, 106. You're looking to see 103.8. Alright, you have to keep into consideration it's going to be a very slow moving issue. Alright, you may want to be invested elsewhere. Okay, so momentum on the hourly is still very negative. This is the green wave. Alright, and the retraction, okay, is still biased to go down to 105. Okay, remember the euro is rising, the sterling is rising, this thing should fall. It's not falling, it's falling because risk aversion will kick in before the US election. That's it. We move on to our next issue, which is gold. Right, let's check it. Okay, so this is exactly what we're seeing now at the moment. We have two scenarios for this. This scenario, of course. Okay, so maybe we need not even get into the very scenario. So what we're seeing bullish-wise, we expect to have bounced out of the lower boundary of the uptrending channel containing the move uptrend. Okay, like this is the channel that you see here. Okay, so here, and sometime when we do break out of that channel on negative bearish news for global economy, we're going to take up to 2018. So what happened last week is that we actually supported at the bottom of the channel, and now we're bouncing out of the bottom of the channel. So this is always the base situation. Alright, this progressive weight. We amended our weight down, like we've already completed the degree 4 correction. That was the week 3. That is 4E, that's the 4E, and that's the 4C. That is 4C. Okay, because momentum more or less if you run we have concluded hopefully 4C. Okay, so how are we treating this? We would study the correction very closely. Okay, so the current correction dictates that we have finished wave 3, alright, in this bullish advance, and we last week. to buy between 1,885 and 1,090. Sorry, 1,885 and 1,890. All right. We're going initially for 1,955. That's that level here, to coincide with a right shoulder formation on the 38.2% fib of the uptrending. There's still potential for that. You may think that this is going to break higher. Of course, it could. The market will always surprise you, but our take on it is this is a very protracted correction, and if you're not already long levels at 1,880, sorry, I have to correct that later. If you're not already long levels at 1,882 and 1,890, we're still in the neckline, like you see, and that was an A, correction A. We still expect to see a C to test somewhere beside 1,885, 1,800, even all the way down to the top of 1 year. It gives you even 1,880. Okay? If this is going to break higher, we will know. There's no need to change. There's no need to change the market. You will see more. Now we have a positive momentum on 1 hour, but it is not enough for this kind of correction. We need to see something stronger on the 4 hours. It's not there yet. Okay, so we're still in corrective phase. So please don't change the market. The market always will always reward people who are traders or people who are patient. Okay, so we still expect to see, and C should take us down to, like you see, this is a red A for the correction A, sorry, in red alphabet. We've only finished 5. We're still gonna, that was the A. Now we have a B. We're gonna go down to C. If you want to take daily profits here, intraday profits at 1,911 and 10, it's okay. B will slide higher than 5. So don't just jump into it. We're still going to see a C. Okay, and we believe the C can take you all the way down to top of 1 here, just about 38.2%. Alright, remember that we're doing this right shoulder, imitation of the left shoulder here, and that took us down to 1,882. This is going to be tested twice and 3 times, and you'll go. Okay, so please don't jump the gun. Alright, so this line is very important, 1,885 and 82 to buy at. This line is very important. This is where you put your stop, 1,859. You're of course putting, if this is going to complete an advanced wave, then we will not fall below 1. And essentially, if we're going to fall below 1, then we're going to be doing a double head to hold on to position, but I would not be liquidate because that should break out into something. Alright, bearish. These are the stops here, 1,859. We try and add again at 4C here. Alright, we just saw A, and we believe A was deeper than that. It did 1,882. We're still now doing B. We would try to add again at C if you're not already long. This is your stop is 1,859. Okay, if we fall below 1, okay, that's what we would be saying, and we would want to be out. So if you fall, of course, suppose you did load at 4C. This is now the bearish scenario. We have to be prepared for it too. Suppose we have negative momentum here. We don't, but suppose we do, and we break below actually 4C on the fall of 4C. Okay, we will hold our positions and try to get out on a rebound and take a wait and see attitude. Wait for break lower for this trend line. You'll have some kind of a double head and shoulder formation here. If negative momentum and on a bounce higher, we enter short these levels. Okay, by that time you'll be seeing again 1882 and 1870. This is the level that we were longing in. This is the support level, would have turned resistance by then. Okay, and we shorted, support turned resistance. Oh, very neat. Okay, and we go down, we have potential to see in this current month of October. Okay, so we foresee then would shift all the way down here. Remember, this is a 1, 2, that's a 3, 4, and that's a 5. So that would be a higher degree, 1 or A, and that would be a B, and we still have a C down and 4C all the way down to 1,760. So we stand prepared for the. We do not expect to see it, but we know what we will do. Okay? So long that we don't have negative momentum on the 1 hour, we'll have to wait until there is negative momentum is going to go short. So currently we are only long, okay, and because we see such high spikes and we see such positive momentum on the 1 hour, this is what we're saying here. This is with, I'm sorry, very sorry. I hope I'm not confusing you. So we will wait for retraction in C. Alright, and buy that. We will not change the mark. If we don't get a retraction in C soon, we will wait until we break higher above 1,920, and then that would be a motive wave, a growth wave. We will buy 50% into it and keep our stops below. But at this level, we will not engage. We will wait for the market to give us better prices. So the market will only buy what is the neckline. We still expect another correction. Personally, I would expect this correction to be lengthy, prolonged, triangle. Okay, so you just have to wait again until you see 1,890 and whereabouts. We're still going to see a C. Okay, and in that case, we will try to implement this by around 1,800. Below that here, 1,959. For 1.5 minutes, that's about $450. We go straight for 1,955. That gives you around the 1,500. What about gold and silver? We're just doing gold, so we should be doing silver now. Okay, of course, the long-term fundamental pictures remains the same. We are inside the pennant and we bounce out of the lower boundary of that pennant. That was last week, or the trade management chart last week. So this is teasing us again. It's of course very inviting when you see a bullish candle going up, to just jump in. You could, if you want to jump in, you could buy and place your stop right below here, right below 4. With 4 here, this is the current live market picture. Well, personally, is that the market turns down and takes my stop, and that's the end of it for me. So you just have to wait for a correction. All right, so this could be the end of wave 5. Remember last week we were saying that we did expect 5 to go all the way up to 2550. That's its projection here. Just a minute. 2550. Okay, so I'm trying to take $1 profit from current levels 24.25 all the way to 25.50. We do expect this could test 25.50. If that's okay with you, then you could buy current market 24.24 and you place 23.15. You can place even your stop here 23.50. right below that motive wave, right below that growth wave. If you wish, or if you're into silver and fundamentally it's every turn, that's what I was going to say. So you could, if you wish, but I would rather stand down until there is a correction and buy into that. If the market is bullish, of course, like you see, you could buy the current market all the way down to 24.10, I'm sorry, and your stop is 23.10, about the dollar. Our projections for this is that we are going to see a fifth higher, I know, and then we're going to see a correction to continue or complete this right shoulder somewhere here. So we will buy then. We'll simply buy there. Okay. We were expecting, given this correction, to retest the lower boundary of the. Actually, we have entries at 2260. This is that level here. Okay, so this shows an infographic of the current price move. So the market is currently contesting higher above. See a 5 all the way up to 25 and 25.50. After this 5, you're going to have a ground correction. EBC will be testing the lower boundary of the pennant, okay, and we'll have some kind of a double inverted head, okay, and then again a right shoulder. We could then, after buying at 2260, we will liquidate at 25.50. You have to keep in mind, and we have to respect the way the market, and they're just gyrating up and down. Okay, so you don't want to buy at the high of the cycle. You may think that this is going to break higher, but this is only our bias because we're in the trade and we want to see it break higher. But actually the market's nature is that it is cyclic, and these are oscillating cycles. So that cycle here, okay, it's going to be here, come down here. It will not come, maybe not all the way down to 2260. We could hope to see some spikes, but we will definitely see 2350. Okay, so that cycle will enforce itself again. Alright, and we just have to be prepared to buy into it. There will be really no need to run after the market. After all, this could be simply a B, like we're seeing here 4A, and that's now 4B, okay. And then we're going to see another 4C, and that one will take. This point. This is why we're also buying again 2260. Don't mind the labels, they change. Like this can be 1, 2, that's 3, 4, and that's a 5, and now we have an ABC. We cannot confirm it, but it is a possibility. I checked it earlier today, and I really did not amend bias. Even though I did amend a lot of things, but I would not amend bias. We would still, this is a very slow moving object also, issue, and it's good to be, you need to be filled low so as to make ultimately good profits. So going to stand as planned. We would like to buy 2260, our stop is 2140, we're going to 2550. Tomorrow we will know where the market will respect the bottom and amend our entry levels. Okay, so our next issue is euro dollar, I believe. Yes, euro dollar. take a few questions first. We're going to sell oil. Currently, the market is moving higher, which is good for us. It will probably meet our. There's a question about oil. So, prediction on all U.S. oil. We were selling it, and we'll get to it very shortly. It's better that we leave it a while because it will meet our entry levels and it will make a very good sell and sell. But we'll get to it right away. Now, this is the euro dollar. Yes. Let's take a look at the analysis first. So we all remember this is the weekly chart. The most important thing, this has been updated. The most important thing about the weekly chart is that momentum is very strong, like you see here. Now that kind of momentum is not shown here, but over here it took us all the way up to 120. So this leads to believe that actually the neckline is bearishly translated. This is the neckline that we're working on. This is why price is now very stagnant in this area, and this is why we have a higher degree correction. So this is not the neckline that we should be considering, and we have been considering all along. Remember that we were saying that we were leaving from neckline 1 to neckline 2 over here, horizontal neckline. Well, so that has currently negating or negotiating. We can choose it. That was the 1, 2, 3, that's the way 3. You could still be doing the 5 and 3, we don't really know. But we know it is very possible that we're still doing the 5 and 3, so this could rise higher quickly. However, we do expect wave A to terminate at close to this slanted trend, neckline at the moving average. Okay. Of course, the moving average will be rising. It takes us to something like 1510, 1508, and 1510. Okay. So initially, our bias is to start buying a long position between 1510 and 1570. All right, we'll buy wave A, bottom of wave A. Okay, so why is this point important and why? Meets these three highs. Also because this is 50% of that cycle. See this dotted line here? and we're targeting 120.50. Of course, 120.50 is the old high made or current levels for October. You could see 121, all right, maybe higher. So this would be a very lucrative and important position to make. Okay, or at 120.50, we're doing $1,500 at 1 to 5 risk reward, 1 to 3 risk reward. So the initial position is to go long, okay, with EV. All right. So this means that we would want to long, of course. We were hoping that there is a neckline here, and the break of that neckline here, there's a smaller neckline here that will break all the way down to 1450. This is not the current case. We're doing now 118. Because we would want to long that level, we have to go back to that. We would want to long 115. There is a possibility that the market could have already bottomed, okay, and A is finished. Okay, so we would have to really investigate that very sharply. All right, initially, like I was saying, we're hoping for a break of that neckline all the way down to the top of 1 and below. Okay, well, if that's not going to happen, we have now this kind of bullish wave. And we'll need to watch the 4-hour very carefully. Okay, why do we need to watch the 4-hour very carefully? Because if we rise above 1,828, okay, then we will have considered that here, and we'll consider that we now have a higher degree Elliott structure in the making, and it would have terminated somewhere at 1,800 and below 1,820, I'm sure. Okay. Okay. So below 1,820, we can either, we will not do anything, we will not, of course, long at these levels. These are very high levels, okay? But this is essentially what we will be doing. Remember that we will need to short below 1,800. Okay, and the final correction we hope of wave A all the way down to 15 and 15.7. At that point, when finally reached here 15.10 and 15.70, into wave 1850, okay, 1826, perfectly entry high levels, okay. We can try doing now micro entries to test the levels. This is what we're talking about here, 1835. We can try taking micro entries like I was saying, and we can also try, we will know momentum on the 15 minutes, alright, to start compiling into the first Elliott structure that shows with such negative momentum to short all the way down to 160. We will be doing that tomorrow. Hopefully by then we will have reached higher levels even than 117.90, the current level here, and we can just mark that. So this is where we expect to enter our shorts, probably. And now that we've missed the long, we do not need to engage longs at all. Day trading wise, that is, alright. We just need to wait patiently for these levels to be met, and then we go short. As explained on this chart here, we're shorting 5, 4C, all the way down to 5. Okay, we're shorting 1850, 1826, all the way down to 1571. Then we will look long at 1510. Alright, that will be the end of wave A. Okay, shown here. And we long into all the way up to 120. Alright, so we move on to our next issue. This is the Swiss dollar. Okay, so is this still retain the same Here there is an ABC. Remember that we wanted to buy between 91.20 and 91.30 and 91.40. So we're about to see these levels now. Okay. The inverse of the dollar against the Swiss currency. So if the euro dollar is going to top here, okay, and we're going down all the way to 115.10, you would expect the Swiss franc and the US dollar against the Swiss franc. Remember that we're doing the multiple head and inverted shoulder pattern. We all know this now, and we wanted to buy the right shoulder. These were the alternate levels we will be seeing and buy the right shoulder, 91.40. Okay, so we'll compile that for the
निकल गए निकल रहे
three, as shown by momentum, then we would expect to see these levels 200% and 205, that level shown here all the way up to 95.75. So this is the time to put your limit entries on the station, okay, and to complete actually getting into that position. Okay, so we move on to our final issue. Today's trade to take, and this is the current market action as of today. All right, we could go into 1 hour. Okay. Let's see that live first. Having a correction, we expect this correction to unfold, and we would like this correction to go all the way. Let's look at our analysis now. All right, let's look at the 4 hour again. Just check something here. Okay, so we have now a head, a strong head, and shoulder formation. Okay, which could break lower to this trend line here. This it to make this kind of shoulder. Technically speaking, that is alright, if the issue is not very strongly supported. So we want to sell into that right shoulder here, okay? And that right shoulder here is detailed on that chart down here, okay? So this chart here shows that this right shoulder here, alright, has potential to rise higher. Rise down. Begin starts here, that's the 1, 2, that's the 3. We have potential to go all the way up to 139. Okay, 139.50 to sell into that. Alright, and if our count here is not really correct, and that is the count to take, if we consider, we could even see prices all the way up to 140 and 140.50. Alright. There is a very strong possibility for that, or at least this kind of fights, and instead of, because if you do a right count, it is not yet segregated, but we'll work on it. That is actually a 1, and that's a 2, and that is a very muted 5. So we could test all the way up to the top of that, okay, and that takes us to 40.50, which will be a very lucrative and strong bearish entry to short at. In that case, we'll be doing a double head. So we do another small left shoulder, or sorry, another small right shoulder here. Okay, so we could expect to see, and that would really be, we have to be prepared for, because like I was saying, this is bullishly translated. We could see 40.50. This is how, where we would like to form a compound short entry between 39.50, 40, and 40.50. So 39.50 is here at this dotted yellow line, and then 40 right above the head formation altogether. Okay, in that case, we would be seeing multiple local heads and then another shoulder before we go down. Alright? Okay. So in that scenario, we would want to sell 30.50, 40, and 40.50. Our stop is 42. And our target, of course, is once we break that neckline, we're going for 36. If the pull is rapid, we'd rather hold on to 32.50. This is the projection for wave 5. Okay, this will of course give you a risk reward of at least 1 to 3.5. For whatever dollar you risk, you are gaining $3.5. Alright, then we will of course contemplate that the growth wave ends at just around 40 or maybe 39.75 about current market levels, okay, and these instead of course the market is saying now higher, so it takes 38.90, 39.50, this vicinity, okay, for these projections. That is, these are the tips of that wave here. Alright, right. And in that case, we will be going to 40 and 40.50. But either way, you would want to have some entry short at current levels. Okay, so what we need to be doing is take that over this point. to be exactly to be fully detailed, we would expect a test all the way up to 47. It's like we have, this is local 1, okay, and then that's the 1, 2, 3, 4, 5, that's the 4, with 4, okay, should test, has the potential to test all the way up to this socket bed plant. Okay, so currently the cycle is stopping on the 1 hour. Okay, it's bearish of course, and this kind of momentum formation is called the zigzag. Okay, like we had the same formation here, and then there was this kind of drop. So after this kind of formation, where it's going to end and where we're going to get filled, like I'm saying, it could get filled at 40.50, probably 40 and 39.50. We will want to do this level. Alright, then we're going to see another zigzag drop, and it's going to be equivalent to that. Should take us all the way down to 35.50 initially. So we'll raise our entry all the way above 41 here. Okay, and we're going to 32.50 immediate target. That's a very hefty trade. Alright, of course there are fears of a second corona outbreak in Europe, and maybe the market is discounting these. Alright, I believe that probably that is true. Strongly supported by suppliers and hedge funds, and it's possible that once we spike into the 30s, you're going to be very strong. You're going to see very strong defense that will take off from 33 and 32.50 and 34. So we have to be very tight with our profits. Alright, once we see profits, we just have to safely take them in. Okay, so that brings us to the end of our analysis. We could take questions now. There is a question regarding Sterling 30.80 at least, maybe today, tomorrow, and maybe by the end of this week. End of this week, you will see 133.20. That's the level here, that's the target, 130.80. Let's see what's doing at the moment. High above 130. Okay, so if you targeted 130, you would want to take that 130.80. This is that level here. You're right here now. Okay, so we're moving across. We're currently contesting the neckline. As we gradually break above it, we'll have opportunities to buy the neckline, and the first target is 130. Okay, we should be seeing 132. Okay, 132.20. Alright, so these are the levels you should take note of. This is today's level 130.80. We'll take 131.50. This is 131.15. This is 131.50. You could assume that today goes on or spikes, you're going to see 132.20. End of history. There's a question regarding how low is the United States dollar gonna fall. The last question that we were considering projections for the sterling dollar. The question was, is the sterling dollar going to reach 130? So it is going to reach 130.80, hopefully. How low is the US dollar going to fall? Well, there is a break in course between issues, meaning that a rise in sterling against the US dollar does not mean that the US dollar is weak. Okay, for some, because today is markets are moving on risk appetite. Okay, so sterling is rising, euro is rising, but it does not mean that the United States dollar is weak. The projections for the United States dollar is that it will strengthen before the US election. Like we were saying, the United States dollar. These are what analysts are contemplating, that it is the general view fundamentally that the United States dollar, the Swiss franc, and the Japanese yen are all will be appreciated. The United States dollar does not need to fall. I don't think it will be falling, personally. I think the ultimate concrete projections, because by the end of this week, exactly where the United States dollar is going to bottom out against again. I know it's going to rise against the Swiss franc. It just saw the top. So you're looking at bottoming for the US dollar. That's my projection going into the United States presidential election. There's another question regarding just did that. We would like to sell. All right, we'll check this again. These current levels that you're seeing are sell values. Okay, our projections are God forbid it will not, but the market discounts everything beforehand. That is. All right, and you need to keep your stop at 42. From the levels to take, the short is around 50, 40, 48, before the full test minutes or micros, and before committing to full size on negative photograph. Alright, if they'll be having you all here with us today, I wish you a very, very profitable day. Alright, and I will look forward to being together tomorrow. Take care and have a nice, profitable day. Bye.